You know, everyone's got a little bug in their brains. That's why you keep making those impulsive moves. A lot of people just aren't great at controlling their own minds. Watching this video will help you clear out those reward system bugs. My own understanding of my brain totally changed after I hit that $1 million mark. Hey, I'm Emma, with Wealth Builder. Alright, in this video, I'm gonna talk about what I learned after I crossed the $1 million mark. There's something that changed drastically before and after I hit that milestone. This is super important stuff for all of you, so stick around till the end. If you want to use what I'm about to share to crush it in trading and hit that 100 million yen goal yourself, smash that like button and let's get into it. Alright, let's jump right into it. To make money in the stock market, you gotta stop doing dumb stuff. So, what's dumb stuff? Like revenge trading, buying high, selling low, and doubling down without a plan. All that stuff I just mentioned? That's what we call posi-posi disease. This disease is I have a fear of missing out on potential trades and I feel compelled to be in the market. Basically, everyone's stuck with posi-posi disease. That's why they can't make it in the stock market. And there's only one reason why everyone gets posi-posi disease. It's a bug in your brain's reward system. Your brains are glitching out, that's why you keep making those impulsive trades. A lot of you just aren't good at controlling your brains. But watching this video will help you fix those reward system bugs. Then your posi-posi disease will go away. And when that happens, your account balance will grow. And then you'll hit that 100 million yen mark too. My understanding of my own brain totally changed before and after I hit that 100 million yen mark. Especially after I started trading with bigger amounts, I started picturing another version of myself, like, standing next to me, checking in on my mental state. That's the kind of image I started to have. The goal of this video is to help you guys learn to control your own brains from a bird's eye view. Let's get rid of those reward system bugs. Think of it like, you know how sometimes there are glitches in games like Mario? We're gonna fix those. So, I keep mentioning this reward system, but what is it? Basically, when humans experience something good, like a reward, we feel happy, excited, all those good feelings. That's because your brain's reward system is releasing happy hormones. It's called dopamine. You've probably heard of it. For example, when you win a trade, take profits, see your balance go up, you feel good, right? That's when your reward system is pumping out dopamine. Dopamine creates a feeling of pleasure in your brain. And to get that feeling again, you repeat the same action. You trade again. But here's the problem. To get the same amount of dopamine, you need an even stronger stimulus. Like, if a beginner makes 10,000 yen on one trade, they're like, wow, I'm gonna be rich. Dopamine rush. But to get that same high, you need an even bigger win. That's the reward system bug. Once you experience a pleasant sensation, the upper limit of the happiness hormone that is secreted increases. So what happens then? Trading escalates. You try to trade more frequently than before. You deposit additional margin and increase the amounts. The more you trade, the more the stimulation needed to secrete dopamine increases. Therefore, you want to trade even more frequently, or increase the purchase amounts. That's a human instinct. Because hormones are being released. It's very difficult to resist that. Hormones, after all, define our emotions. Because these hormones are released, because dopamine is released, you feel happy. Conversely, if cortisol is released, you feel stressed. Because it's a stress hormone. Our emotions are determined by hormones. And dopamine, the happiness hormone, keeps raising the upper limit of our reward system, the sensation of stimulation, causing a malfunction. And here's some more bad news for you. The stock investing you're doing, even psychiatrists say it's got a really high potential for releasing dopamine. Gambling's the same way, you know, there's a chance of taking profits, but also a chance of taking losses. It's the same with gambling, right? There's a chance of losing, but also a chance of winning. Even though there's a chance of losing, when you win, the dopamine released is even greater than, say, hitting a home run in baseball or other sports. And on top of that, money's involved. Unless you're a professional baseball player, you don't get paid for hitting a home run. But with stock investing, if you lose money. But on the other hand, if you win, you gain money, without even working. Of course, the amount of dopamine released when you win goes up. That's only natural, right? The hurdle to achieve the action to get dopamine is also very low. You can trade with just a few taps. Baseball's not like that. Everyone wants their turn at bat to come around quickly, but you only get about 3 or 4 at-bats in a game. And you can't hit a home run every time. Compared to that, stock investing has an incredibly low hurdle to step up to the plate. You can easily make money go up or down by trading with just a tap. That means it's highly addictive. You've all heard of gambling addiction, right? Well, positioning sickness in stock investing is basically the same thing. It's gambling addiction. You get even more dopamine when you win in a game where there's a chance of losing. In the next trade, you need to do an even more stimulating trade and win, or you won't get that same level of pleasure. It's a path to ruin if you keep doing this. You've been taking positions to keep getting that pleasure, to keep releasing dopamine. And you've been constantly reducing your margin. That's what I was like when I was a beginner. I think some of you are wondering, what happens when you take a loss? Of course, when you take a loss, your money decreases, so you don't get dopamine, the happiness hormone. But on the other hand, you get a huge dopamine rush when you win, so you tend to underestimate the losses. That's a characteristic of stock investing and gambling. After a series of losses, a profit-taking trade feels great, right? You want to make up for all the losses. You've all experienced that, haven't you? You can recover if you win. If you get dopamine from a winning trade, it cancels out the losing trades. This is also a glitch in the reward system. Now, I can hear you all saying, just tell us the solution already. There's only one solution. It's to control the amount of dopamine released. Let's talk specifics. After one trade is finished, whether it's a loss or a profit, the key is to absolutely not take another position immediately. Got it? Right after a trade, whether it ends in a loss or a profit, the amount of dopamine release goes up, right? If you take a loss, you want to make it back in the next trade. Because you've lost money, you need to trade even bigger to recover. That's how the amount of dopamine you need to feel good increases. Scary, right? Of course, it's the same when you take a profit. It's good that it ended in a profit, but if you release dopamine with a profit and then trade immediately after, you won't release the same amount of dopamine unless the trade result is even more stimulating. For example, let's say you win with a well-planned averaging down strategy. I'm sure you've all averaged down before. You think, okay, I'll average down in 3 stages. First buy here, second buy when it goes down, third buy. And if that averaging down all goes well and it goes up, you make a pretty good profit, right? When that happens, I stop trading immediately. Because I've made more profit than usual, the amount of dopamine released has also increased. If I immediately think, oh, there's another chance, I want to jump in, and I do, it won't end well. Because the upper limit for feeling good has already gone up. It's very difficult to make rational decisions in that state. You need to create another version of yourself to recognize that. You need to look at it from a bird's eye view. What you all need to do is take a break after every trade. So, the question becomes, specifically how much of a break should you take? Naturally, this varies depending on whether you're day trading, swing trading, or what time frame you're trading in. However, I have a clear definition. I absolutely do not resume trading when my mind is in a state where I'm thinking, my margin is about to reach this amount, or when I see a chart and think, I can enter here, I can enter here. In other words, when positive scenarios of making profits take precedence in my mind. Because in that state, you're already anticipating profits, and your dopamine levels are still elevated from looking at the charts. Your upper limit is raised. So, I wait until that state calms down after taking a break from trading, until the amount of dopamine secreted returns to the level before trading. I'm not actually measuring my dopamine levels, so I decide whether to give the go-ahead based on my own mental feeling. But when I look at a chart and think about trading, I always try to consider the worst-case scenario first. In other words, I always consider scenarios that would result in a loss. I prioritize thinking about the worst-case scenarios for myself. It's become a habit. The moment I look at a chart, I think, I want to enter here, but what if it drops the moment I buy? Or what if I buy but it doesn't go up for a while, and then the earnings announcement turns it into a gamble? Anyway, I prioritize thinking about scenarios that are unfavorable to me, scenarios where I would lose. At that moment, I'm clearly calm. My dopamine levels have clearly settled down. It's a sign that the upper limit that had risen has dropped back down to its original level. That's how I see it. Honestly, when I was a beginner, before I traded, I only thought about the scenarios where it would go up if I bought. I was always thinking, if it goes up to here and I can take profits, my margin will increase by this much. So, at that point, I, as a beginner trader, was already raising my dopamine limit before I even started trading. If you trade in that state and take profits, it's the worst. Because the upper limit for obtaining the same amount of dopamine in the next trade goes up. If I don't get this much stimulation, I won't get the same amount of dopamine. Of course, it won't go well. You're not in a state where you can do normal trading. Guys, you understand this feeling, right? The clear-headed. Yes, you've all experienced it, right? Female viewers, I want you to listen to this as, oh, that's how men are. After a night game, after climaxing, a man's sex drive drops sharply. This is also because of those hormones. Until the secretion of those hormones subsides, the sex drive doesn't recover. Ladies, there aren't many of you who have a short interval between the first and second time, right? That's only for very young people, like high schoolers. Adults can't do a second round right away. So, after you trade, please make sure to check if your brain is properly and clear-headed. What are the scenarios where I anticipate a loss, where my trades don't go well? The fact that I'm even considering these scenarios means I'm definitely calm. I'm not overly influenced by dopamine. After winning a trade, you have to rest until the secreted dopamine subsides. Especially after making a lot of profit. Everyone thinks, isn't that the opposite of normal? But it's not. What's really scary is when you make a lot of profit, when you can take big profits. Because at those times, dopamine is secreted like crazy, and to get the same amount of dopamine again, the stimulation has to be even stronger. This is a very dangerous state. Even when you take a loss, dopamine is released when you win, so the loss is underestimated. Try to develop the habit of thinking, what will my margin be if this loss continues for one more trade, two more trades? That will make you stop. Many of you have likely lost money due to posi-posi syndrome, that urge to trade immediately, which keeps depleting your margin. When your margin decreases, I'm sure many of you experience self-loathing, thinking, I did it again. Am I really bad at trading? Are my stop loss and profit-taking settings poor? Am I stupid? Am I not cut out for this? Do I have no talent? I used to feel that way too. However, I don't believe it's a matter of your abilities being low. What kind of state are your hormones in right now? Is your brain flooded with dopamine, or are you craving dopamine more than necessary? Emotions are determined by hormones, as I just mentioned. So, let's say you go to work tomorrow and your boss is angry. The reason your boss is angry is because anger hormones are being secreted in their brain. Adrenaline is flowing. Humans are emotional beings. There's no such thing as a human without emotions. If you had no emotions, you would definitely succeed in trading. However, hormones are constantly being secreted in our brains, creating emotions. And immediately after a trade, whether it's a stop loss or profit taking, our brains are in a state where it's very difficult to make rational decisions. Therefore, simply stop trading or taking positions at that moment. To cure posi-posi syndrome, it's necessary to fix the bugs in the brain's reward system. The specific solution is to not take a position immediately after a trade is completed. Only after your brain has entered clear-headed is it okay to consider taking the next position. I think some of you are worried, wondering, I understand what you're saying, but can I really do it? Indeed, fighting the urge to take a position without any break means fighting the hormones in your brain, so it's difficult. It's not an easy task. I'd like to offer you another perspective on the solution. Some people trade with very high amounts, right? I was like that when I was a beginner. These people are trading with amounts that don't match their trading skills or the amount of capital they can handle calmly, so they get an excessive amount of dopamine when they win. Because they're thinking about trading again in that excited state, trading with high amounts in the first place causes a surge of dopamine, so of course it won't go well. Let's think about this from a reverse perspective for clarity. What is the ideal state for trading? It's when emotions don't move at all. In other words, the strongest state is when you can create a situation where hormones are no longer secreted. I have trading partners like that. They don't waver mentally whether they win or lose, or whether their money increases or decreases. They have no emotional ups and downs. Normally, you'd be happy when you win and depressed when you lose, right? But they don't have that. Whether they win or lose, their emotions don't fluctuate beyond a certain range. Those people have already created a state where dopamine isn't secreted excessively. It's like a survival skill they've acquired through years of living in the market. However, I don't have that ability myself. I'm aware of that, and I don't think it will ever be cured. I like talking on YouTube like this, and I like talking to people. In sports and other areas, I tend to strongly support the things I like. So, I'm the type who gets easily swayed by emotions. I understand this aspect of my personality, my humanity. That's why, in my case, I make an even stronger effort not to trade immediately after a trade is completed. Conversely, that's my survival skill. It's fine for people who don't get emotionally swayed. Because I think some of it is innate. But I've always had the desire to win in trading. I've continued to face myself. Even when my money decreased, even when my trading didn't go well, even when my hard-earned margin suddenly plummeted, I continued to face myself. And I found my own survival skills. Ultimately, in trading, people with fewer emotional ups and downs tend to succeed. So, even without watching my videos, people who naturally don't have many emotional fluctuations are more likely to succeed. You could say those people have a talent for trading. But most people don't succeed, right? I think there are proportionally more people who express their emotions rather than hide them. Of course, there are some quiet people, but most people say what they want to say, right? Compared to those who say nothing at all, I think there are definitely more people who speak up. That's why I think the proportion of people who struggle with stock trading is overwhelmingly high. Well, even though I'm quite emotional, I've still been able to increase my assets. And when that happened, I had a realization, and looking back, I realized I was thinking like this. A few months before I made this video, there was the incident with Major League Baseball player Shohei Ohtani's interpreter, who was arrested for gambling addiction, right? At that time, the term brain's reward system came up a lot, and I thought, wait, isn't this the same as stock trading? That's when I realized, so that's why I was failing when I used to trade like this. And as my assets increased, the big drops that used to happen after repeated ups and downs dramatically decreased. When I thought about what had changed, it was exactly what I'm talking about today. There's another me monitoring the inside of my brain. Has the dopamine secretion finished? Or am I craving dopamine secretion too intensely? The hourly wage of this guy monitoring me must be quite high. If there's anyone watching this video who thinks, I don't have many emotional ups and downs, that's good news. But I think most people aren't like that. Those people's emotions tend to get too high. When emotions fluctuate drastically, both upwards and downwards, you have to wait until the emotions, the hormones, resulting from the trade have calmed down. When you win, dopamine is released. When you lose, cortisol or stress hormones are released. So, you have to wait for those secretions to calm down as well. After I was able to do that naturally, I stopped having big losses. It's the image of increasing without noticing. If you stop doing weird things and don't have big losses. The awareness of not losing is more important than the awareness of increasing. For those of you who have had posi-posi syndrome until now, those of you who have been revenge trading, why do you revenge trade? Why do you get posi-posi syndrome? You should have understood the principle and mechanism in this video. If you understand that mechanism, you won't do weird things. Instead of trying to increase your assets that way, let's naturally do actions that lead to increases. Let's change. And if there's anyone who absolutely can't get out of posi-posi syndrome, please give up on stock trading. You're not cut out for it. I really think you're not cut out for it. If you've watched this video this far and still haven't cured your posi-posi syndrome, it means you're gambling. It's better to work seriously or start your own business through entrepreneurship. You should go down that path. I've met several traders who have been losing for many years, clinging to stock trading, and they're incredibly stubborn. There are no exceptions. Even if they continue, they can't recognize that they're doing weird things. If you've been losing for many years, it means you've been having continuous big stop losses, right? So at that point, your desire to recover your losses is strong, right? Therefore, even if you take profits once, it's difficult to be conservative there. You end up wanting more and more. So, the range of the upper limit of dopamine that rises is probably larger than for normal people. People who have been losing millions for many years are in a state where they can't trade with normal judgment. That's like throwing money in the trash, so you should stop. Those people should absolutely stop. There's actually another way to cure posi-posi syndrome. It's to learn fundamental analysis. I think many people trade only using technical analysis, but in the end, with technical analysis alone, you don't understand why the stock price is rising or why it suddenly dropped. If you try to find meaning from technical analysis, you'll never escape. Because you can interpret it in any way. There are positions accumulated here, and they're taking in stop losses here, etc. Anyone can say that in hindsight. Instead, when a chart moves significantly on a long-term scale, there is always a fundamental background. Earnings were good, earnings were bad. Economic indicator results were good, economic indicator results were bad. There are proper reasons for those. If you understand those reasons and think, this trend will continue, then you can immediately decide whether to buy or cut losses, right? Because you understand the background of the stock price movements, the reasons why it moved. Or, even if it goes a bit in the opposite direction, if you think, this is against the major trend. There's still a chance it will come back, then you can decide not to cut losses. You can make such judgments. Using fundamental analysis is overwhelmingly easier than judging solely by technical analysis. The reason posi-posi syndrome gets cured is because there's a major trend in fundamentals, and you stop counter-trending that major trend. After all, posi-posi syndrome doesn't work out because you try to do both buying and selling. But if you learn fundamentals, you'll be able to understand the big trends. Institutional investors follow the fundamentals trend. They're entrusted with huge funds from clients, so they can't do trades that don't align with the economic situation. They can't make excuses later. Therefore, institutional investors should also follow the fundamentals trend. The more you learn fundamentals, the more you think, it's better to trade along the big trends, and the counter-trend positions gradually decrease. Imagine you have 3 girls you like, 3 girls you think are cute, girl A, who clearly has an interest in you, girl B, who clearly doesn't, and girl C, who's ambiguous. Wouldn't it be so much easier if it were written on their faces? You'd go for girl A, who has an interest, right? It's the same thing. Learning fundamentals is like being able to see inside the candlesticks. If it aligns with the fundamental trends, there's no need to counter-trend. If you take a counter-trend position, you should immediately cut losses. So, going for girl B or C is the same as counter-trending, because it's written on their faces. However, saying if you learn fundamentals, you won't have any stop losses is impossible. Fundamentals also change their trends eventually. When they change, you may have to cut losses. After all, the major trend in the market is determined by fundamentals, so there's no reason not to learn them. The market changes every day. You have to constantly check new information to see what's being focused on. I think you all look at charts every day. I think you also study technical analysis thoroughly. Please incorporate the latest fundamental information into that as well. So, today I talked about what changed the most before and after exceeding 100 million yen in assets. It was the increased understanding of the bugs in the brain's reward system. I hope you can use the content of this video in your next trades. Also, I'd appreciate it if you could tell me in the comments how you suppress the urge to trade after you've traded. I think it would be very helpful for beginners and those who aren't trading well yet, so please let me hear your opinions. That's all for this video. See you in the next one.